Welcome back, everybody. What is going on out there? Why haven't rate cuts spurred on the real estate market? We're going to discuss this and more in today's video, and be sure to stay tuned to the end where we discuss our predictions for the 2025 spring market. All right, quick plug for the channel before we get into the content. This is our new and improved YouTube channel in this beautiful studio here at our brokerage. We're going to be cranking out content for you guys in this wonderful space. Be sure to like, subscribe, and share. And without any further delay, let's get into the content. All right, so we've been told over and over again that, in a declining rate cut environment, asset prices should increase. And while that can be true, it isn't always the case. What we're seeing here in the Hamilton market is that even though rates are dropping, housing prices are remaining stagnant and even dropping for certain categories of homes. So we have moved from a hardcore buyer's market into more of a balanced market, which we will cover. But this kind of orthodoxy of declining interest rates and rising assets prices, it takes a while for that to take effect. We saw this in 2017 when the stress test was introduced. Rates were flat, and of course, as rates started dropping, it took a little while during the pandemic for things to really rocket up because there was this amount of uncertainty, this big pause. And that's sort of what we're finding now in the market. All right, so let's dive into the stats for October 2024. So coming directly from our real estate board, these stats were released on November 5th. Home sales improved over last month and last year's levels for the second consecutive month. While October sales are still lower than long-term trends for the month, that represents a significant improvement. Quote, many potential purchasers were happy to sit on the sidelines until there was more certainty regarding interest rate movements. The recent rounds of cuts seem to be the incentive needed for some to enter the market. While sales are still lower than historical trends, we expect to see changes as the Bank of Canada makes further cuts to interest rates, making purchasing more attainable for hopeful buyers, says Nicholas von Bredow, our spokesperson for the Hamilton-Burlington market area. So a couple things to unpack here. Sitting on the sidelines, the first sentence of this paragraph is definitely true. What we're finding is buyers are curious about what's happening in the real estate market, and they're very, very smart. So, they're looking out there and they're saying, hey, I'm seeing more inventory than I've seen in years, and we're seeing rate cut come down, and it's like, yeah, my affordability is improving, that monthly carrying cost is coming down. However, the products that are available to me on this market are still not what I'm looking for. People are really, really looking for value before they're jumping into the market. What we're hearing a lot is people do not want, to do any work at all on a home. If it's dated at all, if there's any coulds or buts about a house, so it's like, well, if someone buys this, they could finish the basement. Yeah, but it's not so bad compared to XYZ. The more that sellers are saying those things, the less interested buyers are. But if it's move-in ready and it's priced very, very well, sellers should be expecting to get action on their listing. What we're hearing from buyers is, we're seeing all this inventory come in the market. We're seeing rates come down. The media is telling us that rates are going to come down further. You know what? I'm going to wait. And basically, they're not wrong. The amount of inventory that's coming out is far surpassing the current demand. Until we start to see this inventory get gobbled up and get below 3 months of inventory, I expect that we'll be in this balanced market for a while. All right, so pressing ever onward. The rise in sales relative to new listings supported a modest monthly decline in inventory levels, which aligns with typical seasonal behavior. Nonetheless, the adjustment caused the months of supply to fall below 4 months, representing a shift from a buyer's market conditions to a more balanced market. While this shift is very likely welcome news for many sellers, it is important to note that supply levels remain elevated compared to sales in the region, and it will take time to work through inventory. So this is reflective of what we just discussed. We're seeing more homes come onto the market. Buyers are still very, very risk averse. They're like, you know what? I don't want to get burned. I don't want to see a sudden price drop. I don't want to be in competition. There is the mortgage renewal wave kind of lurking in 2025 as well. And people are saying, hey, I'm just going to wait and see if there is more inventory coming to market. What's going to happen with that? And despite the adjustment, prices still eased, albeit at a slower pace. In October, the unadjusted benchmark price was $820,000, a decline over last month and less than 1% lower than levels reported last year. So in our last couple videos, prices have basically remained around this kind of, 820 to 850 price range. Prices have been hovering there. Market conditions are keeping the market afloat in this benchmark price range, but it isn't necessarily the sign of a healthy real estate market. What buyers really want is to purchase homes at a discount. They don't buy the market recovery. So what they're saying is, hey, your house may be listed at $850,000, but I don't believe that the economy and the amount of supply that I'm seeing is real. It may be just a mirage. We're seeing high unemployment. You know, people are maxed out with their credit. It's very, very difficult, you know, to access credit in the marketplace. So they're saying, you know what, it very well may be worth $850,000. We've seen other comparable houses sell for this, but we really want to only pay, you know, $785, $795. So they're pricing in a 5 to 10% discount for a future price softening, just in case there is a sudden drop. Because, you know, people like their houses to remain at the same price or go up at a sustainable rate before feeling like they are comfortable to transact. So, you know, hopefully we get back to slow and steady, stable appreciation. We're not going to have insane double-digit increases every year in certain areas. And to make things a little bit more predictable, a little bit more stable, people can know what to expect in terms of time frame and selling price. So what does this mean? For buyers, you know, you do have an opportunity here for sure. You have more supply than ever's been on the market in a declining interest rate environment. You know, if you've been sitting on the sidelines, it's probably a good idea to reach out to your real estate professional, your mortgage professional, and put a plan in place if you are considering getting into the market. For a seller, you have to be priced exactly right, probably a little bit lower than you're going to be comfortable with to get those showings through. We are seeing showing activity ramp up in our marketplace through our appointment center. But, you know, if you look around and there's 10 to 15 houses for sale in a 1 kilometer radius in your neighborhood, you got serious competition. You know, it's like if somebody's walking into a car dealership and there's 10 of the same car, you know, at every location, you're going to be facing competition. So it's very important that you win on value, win on price. It doesn't mean you need to fire sale your house. But if you're trying to do a sell and a buy and the upgrade house is at the very, very top end of your budget and you're banking on getting a spectacular price and outperforming the market, it's probably not a wise decision at this point. I would definitely say, you know, unless you absolutely have to, sell before you buy. Know what you're working with, because you're going to have a lot of opportunity on the buy side, depending on where you're going. Obviously, check in those markets with those professionals. All right, everybody, thanks very much for watching. Hope that you found this market update interesting. And as always, feel free to give us a call to discuss your unique real estate situation. And we do have fantastic referral partners for mortgages and great real estate partners across the country if you are thinking of changing markets. Thanks again. Be sure to like, subscribe, and share, and we'll see you on the next one.